More inventory is coming to the Toronto real estate market. Stay tuned to this week's episode to find out how that impacts the Toronto real estate market on this episode. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you joined me here today. The first article that we're going to talk about today is this one that came up from RBC. It says, a turning point, more sellers are entering Toronto housing's market. And if you've been following a lot of my content in the last 2-3 weeks, give or take, we've been kind of talking about the dynamics between the amount of listings and the amount of buyers and what the buyer sentiment is right now and how they're clashing to kind of produce a more balanced market. And last week I said, depending on who you talk to, kind of where you're looking, you can obviously cherry pick whatever data you want to kind of conclude to the same kind of conclusion that you have, right? So now there's more and more people talking about it. So it's kind of slowly skewing towards the, yes, you can cherry pick it, but there are more so the odd ones out that are still providing a lot of offers. And this is what I was saying a week ago, where the really, really good properties are still selling with multiple offers, but most of them are just kind of left behind and failing on offer presentation. This is kind of like a game of chicken between the sellers and buyers right now, where a seller wants what was sold previously, or they want that much action, but if there's not that much action, they don't adjust and maybe they don't sell, and that's fine. The sellers are winning in that game of chicken. But if the sellers bought something already and they have to sell, then that's when we're going to kind of see a cascading effect on the market, right? So we're going to talk about that in today's market episode. So the first one here is from RBC saying that the local board's recording that there's more inventory. So there's a lot in Calgary and Edmonton, but let's just focus on Toronto. You can see that the amount of home sales in February was a little bit less than last year, but last year in February was bonkers record year. So, hard to arrive at a conclusion, but there are less listings. So what I have highlighted here is a really important part, saying that if more and more people are taking this opportune time to come on the market, then we're gonna have way more inventory than we have for buyers, because there's a lot of things that are happening right now that are kind of scaring off buyers, right? And we've talked a lot about them. War, interest rates, and slowing demand, right? But one of the things that you always have to kind of extrapolate into what's happening right now is, and this is a little bit more kind of focused on in this year, but come February, March, especially right now during March break, there's usually a lot of listings that come on, right? So this is kind of normal in the seasonality, and it could be completely being blown out of proportion. And I'm a little bit on that fence, but at the same time, I'm seeing a lot of properties fail, and I'm kind of also on that. So it's something you're gonna have to watch. And again, really depends on the area that you're in to kind of determine which side of the market you're on, right? Like a seller's market that's, crazy, or a weaker seller's market. And again, it's not buyer's market anytime soon. Now, one of the things I will point to you that's can be alarming for if you're a seller, but if you're not, this may be something good for you to look at. So this chart here, you probably would have seen if you're on my newsletter. Again, if you're not, you can subscribe to using the link below. I was talking about how the amount of listings going from January to February is usually a set amount. And this chart is courtesy of Ben from Edge Analytics. You can see that in 2021, we saw a 20% increase in the amount of active listings. And active listings just mean how many properties are available to buy at the end of the month. And you can see that we kind of shot up to 70% in February. Now, this may look completely alarming, because in what looks like the last 10 plus years, we've never seen this much increase. But at the same time, it could also very much be that the spring got pulled forward, right? Meaning that a lot of people who are looking to sell are be like, oh, hey, that guy got X, I want X plus Y, and they've all come to market at the same time. The thing that kind of trumps that argument in terms of so much listings is we saw this last year too, right? So why didn't anyone sell last year, or why didn't more active listings come last year? And how that changes is if all of it got absorbed and gobbled up, right, then the active listings will get reduced. Or the counterpart is that maybe people are actually trying to sell a lot this year. And this is something that, again, it's 1 month behind, but what I'm seeing right now is there is more inventory, but same thing. Good properties are selling with multiple offers. Everything else kind of stagnate. A lot of relists, a lot of termination right now. All right, so we got the next article here, which is Canadian real estate markets are finally seeing more sellers. Again, this is piggyback off of what I was saying over here. Now, they're using the exact same chart that have RBC here. But one of the things that I want to point out to you is that right here, they have this demand and supply condition chart. This one is using the data for sales to new listing ratio. And in short, without getting all nerdy for you, it's the amount of new listings as a percentage of sales. So the higher the percentage, right, between 0 and 1%, 100%, then the stronger the seller's market, the lower the number, the weaker the seller's market towards the buyer's market. you can see in here they use the same kind of areas, and you can see Toronto that we're now at 0.66. 0.66 is still a very strong seller's market. We're in like 0.7877 the first 2 months. So for us to see a decline from that to 0.66 is a significant amount. The question that everyone's going to have is, can this 0.66 go down to here a balance, which means that we'll probably not see offer dates anymore? And are we going to even see more come down to a buyer's market? Now, we haven't been in a buyer's market very long time, or in a while. I don't think we're getting to a buyer's market territory, but anything is on the table right now, given what's happening in the east side. Anyway, so without going too much into that, I am watching this, and I would have to see this or the months of inventory, change into a more balanced market before I see it. But what this dictates is, in this number, is that I think we're going to stop seeing so many offers on offer dates on properties. So I would say a good, really kind of sought after property, maybe you're seeing 5+. Anything from 0 to 5 is probably like, it's not bad. Someone needs to sell. And then there's a lot of people who are going to kind of be not getting any offers. And I think we're going to skew more and more towards the part where we'll start seeing less and less offer nights and just kind of offers anytime. All right. And one of the things I did highlight that's actually rather important, and I'm saying this to you because I'm giving you like kind of real data as we talk about it. And I've always been of the belief that if there's new input, you should always be able to change your output. So if I get new information, I should always be able to change the way I have kind of my outlook on it, right? So I'm not one of those people who are going to be like, definitely a bull, right? If something changes, I'll tell you. But as of right now, I agree with this, where it says 1 month of a trend does not mean it's going to happen. But a month of that trend does preclude that it could be the start of that happening, right? So just because we've seen a slowdown doesn't mean we're going to crash. But just because we see a slowdown also doesn't mean that a crash isn't coming, right? So you kind of see we're like, in limbo. That's why you got to watch every single week to kind of see what the hell is going on, right? So this is the type of real estate content you enjoy, and make sure you help us smash the like button and subscribe to the Prime PPTO channel, because every week we make 2 episodes of these content for you, just so that we can be honest and transparent and tell you kind of what's going on, right? Whether it's a seller's market or a buyer's market, I'm going to be fully transparent to you, so that whenever you're ready and you'll be like, you know what? Time to make your real estate move, whether it's buying, selling, or investing, you'll be like, Zhen and his team, I'm going to book a call with them to kind of chat about strategy, about what's going on, right? And you can do that by using the link right here at the bottom. It's www.chatwithzen.com. Chat soon. All right, now back to the next article. So we got here, more than a third of Gen Z plan to co-own a home with family or friends. So for anyone who doesn't know what Gen Z is, it's basically anyone born in like after the mid 90s. So they wouldn't know what Backstreet Boys and Spice Girls are, which, dates me. But essentially the point here is that saying a lot of people who are, within the 20 to 25 year, 27 now, I guess, is knowing that the price of a home is getting way too expensive and they're okay with owning it. The interesting thing that I'm going to show you here is that it says 26% of those surveyed plan to co-own their home with their family, which is very, very normal. And I've said this even like 4 or 5 years ago. Like where I'm from, living with your family is normal. It's totally normal. If you actually talk to anyone, a lot of my clients, right, like who are of Asian background, they actually have their in-laws move in with them, especially when they're about to have kids, because that's free daycare, right, and babysitting. So that's actually a perk, right? So in the Western culture, that seems like, I don't want to move out of my parents' place, which I had, but a lot of the perks that with multi-generational families that, you save a lot on daycare, which is rather expensive right now. Now, the other interesting thing here, I just kind of looked at the view results here earlier. You can kind of see here that a lot of people prefer over here taking on more debt. So it's between 17 and 16%. Sorry, it's better than taking on more debt. And what that basically means is that they rather not take on such a big mortgage and would be okay sharing it. Now, my belief is that I've done joint ventures with people before, and I'm personally not a big fan of it. But when you need a home and that's kind of your only option, it's a totally different kind of story, right? Whereas with my joint ventures, it's more about investing. What's interesting is that we're starting to see a lot of companies kind of opened and started to kind of help out people with the co-ownership, right? So I think the previous Bank of Canada head, Stephen Polos, actually is on the board of this company called Keys that helps with co-ownership. And then this other one here called GoCo Solutions, I quickly looked into them. It's basically like Tinder for real estate. If I butcher it, I'm sorry, but that's kind of what it is, just looking for a housemate, and then you can buy a place together with that, right? It's a pretty big commitment, right? All right, so I got the next article here, which is home prices in this Ontario city have nearly doubled since the pandemic hit. And if you are trying to guess, you can put in a comment below to see if you know what it is. But in short, the answer is actually it's Windsor. And the crazy thing is before pandemic, it was at $386,000, and now it's about $704,000. you have to remember, while people see things like this where prices are doubling and they kind of want to FOMO into buying something, that's a real estate investment property, you have to understand the setup for this is totally different, right? A lot of people are trying to go get more space, and you could definitely get a really big home in Windsor, like way back, right? Even when we were looking, you could buy a detached home in certain parts like 4 years ago for like $120,000, right? So it was a very investor-driven market, and I think that the prices going up had to do with the investors going there because the cash flow is really good, plus a lot of end users wanting more space. So Windsor's not as kind of grungy as most people kind of think it is, but being at $704,000 is actually lower than the Canadian average. So while it's doubled a lot, same as like cities like Bancroft, it's not like crazy. It's just that when you're kind of moving along the Southern Ontario part, you get to the point where like if you're driving to kind of qualify, you go all the way to Windsor, you're at 700. On the east side, you have to go all the way to Belleville, which is like at like 550, 600. So between those are the two far spectrums, you just kind of pick where you go. And you go north, you're kind of like at Aurelia or Sudbury, North Bay, right? So those are kind of really your options if you want to be like sub $800,000 or so right now. Yeah, it is kind of crazy that what the pandemic did to the market. Now, the last two things I want to talk to you about is the Bank of Canada is misleading, and they're saying that low rates did not drive the real estate market, but that's kind of baloney. Let's be real. If the Bank of Canada right now is saying that it wasn't their fault that prices for real estate kind of skyrocketed like 40%, give or take, I think 38, because they reduced interest rate, and I'm pretty sure. Like, I don't want to quote him, but like Tiff Macklem said that straight up, hey, we're going to keep interest rates low until 2023, right? Don't worry, borrow as much money as you can. And he said that at the start of the pandemic to kind of, surge kind of borrowing and increase economic activity during a pandemic, which makes total sense. But I think he was a little bit too aggressive on that. But what kind of drives me insane is like, clearly we know he's wrong. He's also the guy who said, inflation is transitory, and it's not, right? So I just have a hard time with someone who kind of just doesn't admit that they're wrong. And they're like, hey, you know what? I messed up. This is what the case is. And if you have a new input, you can have a different output. You don't have to have the same output when you have different inputs, right? And the inputs have changed so much, right? This is exactly what I'm saying. Like, you can't have someone who just constantly makes predictions and say, that's the way, without kind of taking on the external other things that are happening, right? And, if you're a lot into kind of like macroeconomics or kind of just getting analysis of what's going on, you need something called like red teaming, right? Which is kind of just having someone who has a negative opinion so you can understand the opposite of what's happening so that you can actually just see that perspective as well, right? It's a level of empathy. But the reason why I'm kind of going on about this is he keeps talking about how, it's a supply issue, right? And while it is a supply issue, when you increase the demand so much, you're going to have a supply issue. You see what I mean? Like, supply and demand. I'm not saying that supply isn't the issue. Supply is definitely the issue. But when you kind of crank the knobs and you make and increase the demand, yeah, you're going to make the supply issue worse. And the reason why I'm talking about this again is because if you look here, the next one is saying that Canada has reduced the unemployment rate back down to pre-pandemic level. And I've been saying this a lot. There's two things that are going to make the Bank of Canada increase the interest rate. Inflation is quote unquote tamed, which it's not. But the other one is the jobs. And if there's enough jobs, then therefore they're going to increase interest rates. And that's what I'm saying. In April 13th, which is the next date, the Bank of Canada plans to make another announcement. They're likely going to increase interest rates again. And that will have a detrimental effect on the market, like a very minor one, because now we went from 0.25% overnight rate to about 0.75 overnight rate, which should increase the prime by 0.5. And that will kind of freak some of the buyers out. And that's what I'm saying, will probably stagnate. The 0.5% increase on mortgage rates is not going to make or break anybody, but it will stagnate the market. And that's what I was saying. Recently, I think the March numbers will probably be like up maybe 1%, 0.5%, give or take. I think the Toronto side is having a lot of activity, but the area surrounding Toronto is not doing well. Because what I'm hearing right now from a lot of people who are calling me and my clients is a lot of people are being called back to work right now, and they're all looking for a home in downtown again. Some are even saying, hey, I need to sell my place out in the burbs just so I can go back downtown because they thought their company was letting them work from home forever. But at the same time, I do have clients who are also still working from home staying that way. So it's very situational depending on the person. I wouldn't say just because I got 5 phone calls in regards to that, that's what's happening in the market. It's just there's a lot of things that are moving right now that you need to keep in mind. But I don't think we're going to see rapid price increases like we saw in January and February going forward. hopefully this kind of gives you an idea of what's going on. And I know like things may seem like they're changing all the time, but really it kind of is, right? And this week I didn't even touch on kind of what's happening in the war and the gas prices, which is absolutely bonkers. But if you're looking for some good advice on how to navigate the real estate market right now, you can book a call with me using the link right here. It's www.chaozhen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.